Well, hello everybody. It's midweek again, and this is Rick Russell with the Houston Buyers Club and RussCorp. Wanted to get out with you today. Got my brother Steven here. Say hello, Steven.
Hello, everybody. Good to see you today.
Hey, well, look, today we wanted to go over some things. You know, we get asked a lot of questions, and Steven had something come up here the other day, and we thought it was real important that we bring out to you. So the question is, where is the money? Where is the money?
It's always money, money, money. Everybody wants money. But how do you get it? That's the secret.
Yeah, so Steve's going to go over some things today that we've done in the past and things that we continue to do, and talk to you about where we find money, how to find money, how you can find money, how everybody can find money. Money, money, money. So who is Houston Buyers Club? Well, there's a couple of things you need to know about us. Houston Buyers Club is a local real estate group. We work with guys here in the Houston area. We're local. We're local investors ourselves. We work in the Houston area. And we do deals here in the Houston area. So we have a lot of information developed around this market. We're a company looking to establish long-term relationships, and basically that's so that we can create a type of leverage. You know, knowledge is power. Two heads are better than one. We're a company committed to serving our members and community through real estate investing. We're here to help you guys. You know, one of the things that we always tell people is asking a question is free. If you don't ask us, we can't help you. So please, please, please feel free to call us at any time. Get with us on our Facebook page. Get with us on our emails. At the end of this presentation, we're going to provide you a contact sheet that'll allow you to contact us in multiple different ways, including our personal cell numbers. So hang in there for the end of this presentation. So, greatest part about Houston Buyers Club is we are a real estate group, not just an education company. We're actually investors investing in Houston. Now, this is us. That's my son Chris over on the left, myself in the middle, and Steve over to the right. Houston Buyers Club and RussCorp LLC. So, what have we done in our life? You know, guys, we've been out here in the market since, really, I think I started in 2012. Steve, you started a little before that.
Well, we started RussCorp and Houston Buyers Club. We started RussCorp in 2010. I've been doing this since 2003.
Yeah, it took them a couple of years to get me to quit my corporate fund and come over. I think I started in March of 2012.
Yeah, it's about right.
Yeah, March of 2012, and kind of made the transition. Yeah, it can be frightening, guys, but you know, the best way to do it is just jump in both feet.
You know, 10 years running with the company, and we're still here. That's what counts.
Right, that's right. Hey, look, in that time, we've done over 500 real estate transactions. We've made millions in real estate investing profits. We've coached people. We've mentored $1 million producing students. We're featured on radio, YouTube, and Facebook, kind of like what you're seeing right now. You're watching Facebook, right?
And not to mention, we provide a lot of education. That's one thing that you can't live without. You got to stay up on the market, stay up on what's happening and what works today.
So these are just some of the things. You know, RussCorp is not just a company, HBC REIA. You can see down in the lower left and the lower right, those are some of the events that we sponsor. We put on some educational networking events. Chris up in his Natick of the North outfit up in the upper left. Steve in the middle, me enjoying a football game over on the right watching the Texans. We are out in the community. We're just regular guys and gals just like you go. These are some of the houses that we've done in the past. Look, you can see we do all kind. We do really nice houses to some really
rough houses.
Really rough. Yeah. That's a good way to put it. I was going to say junk, but
well, you know, hey, junk is an eye of the beholder. It looks like, smells like money. It works for me.
Yeah, one man's trash is another man's treasure. I got it. I got it. So Steve's going to talk about. You know, one of the things we've been going over since last Friday is due diligence. We talked earlier this week. Wednesday, I did a full due diligence class. Friday, we talked about property due diligence.
Correct.
Today, we wanted to further that information and go with the financial side of the due diligence. Now, this is much more in depth than what I went into when on Wednesday of last week, as I was doing all 5 phases of the due diligence process. And if you need to see that video, please go to our Facebook page, facebook.com//HBC REIA. It's on our video section. Please take a minute to watch that. It's not a long video. I think it's 20 or 30 minutes long. Then you can follow up with the Fridays, a little expanded version of the property due diligence. And then following up today with the financial due diligence. Now, Steve's expertise, in addition to real estate, is Steve's been a financial broker and loan broker for many, many years.
Since 2003.
He has a lot of experience in the finance field and is extremely knowledgeable. So I'm going to let him take the lead on this. I'll probably be interjecting because you know me, I can't shut up.
That's all your life.
Hey, look, I'm the last of 5, you know.
Yeah, I know.
I'm the youngest of 5 kids. Heck, you know, I had to talk when I could, right?
Hey, we have 4 boys sitting at a dinner table. You got to interject it in. Hey, guys, financial due diligence. This is real important because as we go through our training over the next couple of months with you, we're going to probably expand on a lot of the ideas that came in Rick's training last week, which I thought was real good overview of due diligence in every field we got. Money is real important anytime. When I first started out, I came out of a corporate world. I had a lot of extra cash. I had retirement funds and everything else. And I jumped right into landlording and mortgage brokering and ended up with Wall Street brokering and just really got into all the types of financing available. But financing due diligence is so important.
All right, you know, yeah, it's funny you say that, Steve. You're right. We came in from a little different perspective. We weren't the guy that had 0 cash coming into the business. We both of us had a pretty hefty financial portfolio at the time we started this business. So we're not the guy that came in and what do we hear all the time? I don't have any money
and
I don't have any credit, but I want to do this business. Is it possible? Well,
we're going to talk about that.
Yes and no's.
Yeah. But anyway, financing and getting yourself in order when you're just starting this business, or even if you've been in the business a while, you got to check your financial due diligence, and that means personal also. You got to get one thing. I'm going to get one thing out of the way. Rick just mentioned it. I have one major belief. We do have a lot of people ask us a lot about properties. We have a lot of people ask us about finding contractors, how to manage. But the biggest question is, like Rick said, money. How do I get money? If I don't have money, if I've got bad credit, what can I do this business? I'm going to tell you my answer, and I agree exactly with this because I've been here both ways. You can't. Well, you got to be racket. You probably shouldn't if you don't have any credit and no money.
But you could.
You could. You could get lucky and be that one guy that hits thumbs on one deal that falls in his lap and makes $50,000, $60,000, but try to repeat it 4 or 5 times. Doesn't usually work.
So it goes on to that adage, you got to have a little money to make money.
You
right?
got to have money to make money. You need to invest in yourself. You need to be able to put yourself in a position of financial strength. That's the way you need to be in real estate, guys. Unless, hey, you won the lottery, you don't need a bunch of credit. You don't need anything. Or if you're born with a silver spoon, gosh, how many people I know like that? Very few. The ones I do, I try to borrow money from.
That's right. That's right.
We love those people, but most of us are just like us. We have to learn to find money, and we need to fund our real estate deals, and need to learn all the advantages and what financial programs are out there, Rick.
So we're talking about leveraging our capabilities, correct?
Absolutely. It's real important because there's a lot of vehicles, and a lot of people don't know what they need to do. First thing I think you need to do is sit down with yourself, your partner, your wife, just sit down and look at your personal finances. If you're just starting out, this is mandatory. It's like writing a plan. You need to know what you have, resources you have today. Do you have savings in the account? Do you walk into the business and you're doing a main job and you just have a lot of extra money? Do you have a big 401k that you can borrow money from? Do you have some friends with IRAs that would lend you money? Retirement funds, these are real important. What do you have an additional source of income? Maybe you got a couple little other odd side gigs you're doing that are making you money, and God, you're paying taxes. Let's find something to do with this to mitigate our taxes. You need to know what your budget is in investing, because if you don't know what you got, Rick, you don't know where to go.
Well, no, and I get that, but let's go a little further. Now, I get that. This is going to be an eye-opening event for a lot of people. Many people haven't done this. They haven't really looked and sat down and figured out where they really are personally. You're going to find out, like many folks have that we've spoken to over the last 3 months, especially during the COVID period.
New period in life, guys.
Is that they can really carve out a lot of the things that they were doing. In other words, what I mean is they can learn to budget a lot better by doing away with things that are really superfluous. Like, I know there's a bunch of you out there that have streaming services that you never watch, that are just taking money from you every month. And God forbid, there's some of you out there that have a payment that you pay every month to a gym that you never go to. You can cut your cable bill. You can reduce your electrical output. There's all kind of ways you can go to save money. You can reassess your insurances. You can car, house, personal, life.
So paying off your debt.
Pay off expensive debt with cheap money.
Right.
So there's a lot of ways you can mitigate what your expenditures are so that you can have more money.
Yeah, the bottom line today is we're in a different situation we were 3 months ago, 6 months ago. We're not in a booming economy. We're in a very stressful economy. We're in a lot of people have lost their jobs. A lot of people have maybe had reductions in their pay, but they need to still look for the future, and they still want to be an investor. They still want to continue with their housing, their portfolio, but you got to really take a good look at your personal finances. Don't just be in denial and say next month business is going to be great. Guys, we don't know.
Gosh, goes Stephen, that makes life sound awful gloomy, all those negative stuff out there. I mean, there's no money out there.
There's always money out there, guys. I'm going to tell you, and I said this 6 months ago, and I'll say it today. There's more money out there than I've ever seen in any time I've been in the business. You just have to know where to look and how to use it. That's the bottom line on it. And second thing is the people ask is, how much money do I need to get started?
This goes back to that question, can I do it with no money and no credit?
No.
So the reality is you can, but like Steve said, that's going to be that golden parachute that just falls into your lap. The reality is, even if you're doing small things like wholesaling, you're still going to need money to advertise and market. Absolutely. Right?
Every month.
Every month. Yeah, because you know what happens when you stop advertising?
You have no job, you have no deals.
It's like the old proverbial saying, once the vine starts to shrivel, all the fruit dies. So if you don't keep growing, then you're going to be shriveling.
And wholesaling is a challenge today. We did it for a lot of years, up to 100, more than 100 houses a year. It got real costly. Maybe that's not your goal. Maybe you only need 2 or 3. You still got to go try to find your own deals, or find a way to get with a realtor to help you get deals. But if you're going out wholesaling, and that's what you want to start because it is a little bit less expensive, you still got to have that marketing money.
Yeah, what about flipping, Steve? Do we need money for flipping?
Absolutely. Flipping today is a little tougher. The margins are thinner. But here's the thing a lot of people don't realize. Yes, I can go to a lender and I can get 70%, 65% to pay for part of my cost of buying the house. But normally, flips today, you're always short reserves or rehab money, which means you got to get additional money. So you need money in the bank, guys. they require, even the hard money lenders want to see your bank account.
Yeah, I got it. You know, one of the things that surprises a lot of people is that thing called reserves. And that's a lender wants to know you have money available to start the rehab.
Absolutely.
Because typically you're not going to get paid in advance on the rehab with a lot of lenders. They're going to give you a draw after you actually do some of the rehab.
Correct.
And they're going to come in, they're going to inspect what you've done, and then pay you what you've already spent. The other thing that a lot of people don't understand is there are holding costs. And I'm surprised you didn't put that in there. And there's holding costs involved in keeping a property during the period that you're doing the rehab and prior to the physical sale of the property to an end user and buyer, landlord, or somebody that's actually buying on the market. So you've got to keep that property up. I mean, in the very least, you're paying for insurance and taxes and utilities and anything else that comes up on the property.
Yeah, and even in today's market, because we're seeing a lot of times that the financing is getting hard for the individuals that are buying your properties, it's taking longer. Longer just means you got to pay more money out. You're holding it longer. So these are important things. So yes, you do need to have some money.
So I guess the same thing holds true on the buy and hold. It's pretty much a flip. I mean, you're doing all the same things that you do on a rehab. You're buying the property, you're getting it fixed up, and you're holding. But you're holding prior to starting to make income.
Correct.
So you're going to have the same cost associated with it, even up to and until you get a renter in the property. So I guess pretty much the same thing. So probably in a flip and a buy and hold, you're going to need somewhere between, let's just say it's a standard $150,000 house, $175,000 house. You're going to need somewhere between $30,000 and $50,000 just to hold that property, and sometimes more. I mean, if you're flipping a property, what is my favorite saying when you're flipping a property? You go in there and look at it to see what it needs to be rehabbed. You're not Superman. You don't have X-ray vision, and you can't see behind the walls. So what happens? I mean, what happens every time just about that you pull down sheetrock? You find something you didn't want to see.
Right. I started in the landlord business before this became a business for us to be a real estate investor. And my first 8 or 9 houses, I was just like most people starting out. I knew very little about rehabbing, but I'd buy the house, I'd look at it, say, "Hey, little paint, change the carpet. I'm great. I spend $5,000, clean it up. I'll get a renter in there." Oops. Wrong.
$20,000 later.
$10 or $15, $20,000 later, not every house, but $10 or $15, $20,000 later, the house was ready to put a renter in there so that we could have a nice place for them to live and definitely a house that is worth keeping and keeps you from having to pay a lot of repair bills. What type of funding is available to purchase and rehab and refinance? This is something that's asked a lot.
So you mean there's more types of funding than just going to the bank?
Well, yeah, the bank's a nice place, but it does not suit a lot of people. How many ways are there to fund a deal? Yeah, it depends on the deal, guys. Always depends on the deal. We're a big proponent of buy and hold and flipping for cash flow. So you're going to see a lot of what the lending we have pertain to that. So wholesaling is a different world, but from this point on, we're talking about financing houses. Conventional lending. This is what Rick just said. The banks, mortgage brokers. This is the people that we go and get our home mortgage with for our house. These are the people that they usually teach you to go and get a conventional or mortgage loan on your first couple of houses. So you can buy and hold. It's not a rehab loan.
So I want to make sure people understand when we speak of conventional loans, we're speaking of the conventional form of a loan, not an FHA, VA, or government-backed loan. That's a different type of loan than a conventional.
And it's not an investor type loan.
Conventionals are ones that are put up by the bank that are backed by you and the property, not by the government
That's
for
right.
repayment if there's
That's
a
right.
default.
Well, the biggest thing on conventional, you got to understand, these are the ones that most people use for buy and hold. Although a lot of times you have to use a combination, and we'll go into that a little later. But most of this is where mostly people get their loans for buy and hold.
Now, conventional loans, they're typically a 20% down.
Correct.
Whereas FHA, VA, that kind of thing, 1 to 3% is common. 5% is most common. That is not a conventional 20%. So you got to remember, you're going to come out with a minimum of 20% down.
Well, there are some exceptions. There are some investors, if you're real strong and you got good credit, there's still some 10% down loans out there.
I agree, but those are typically loans that are done with an organization that you've done business with.
Absolutely. So don't get it wrong, but figure 20%. That's pretty much normal.
You have a relationship.
Interest rates are fairly low.
Hey, look, right now, lowest we've ever seen them in my life.
Oh, back to correct on the FHA and VA and all that. Can use them, yes, but you have to live in the house for a year. And that's not usually going to be copacetic with the wife. We're moving in for a year and then we're going to go ahead and move out because I'm going to turn it into a rent property. On the conventional, they're just most widely used. They're most available. They're very easy to understand. They typically have the lowest interest rate and than anything else. The negative thing about they limit to how many you can get.
Yeah, as far as I remember, 4 was about as many as you could get in a single, with a single entity, until you took them and bundled them into a portfolio loan.
Well, we had to fight conventional lenders to even put it in an entity. They wanted to put it in your own personal name, and you do that. But the problem is, it goes on your credit. When it goes on your credit report, 6, 7, 8 loans down the line, the banks come to you and say, we can't give you any more. And you go, why?
And the other thing is, people that have challenges with their credit, this may be a loan that's not available to you.
Absolutely. And the main thing you want to do is you don't want to get to a debt to income ratio. The banks do say, no, we can't lend you any more money. Even though your credit's good, you may still have a great job, you're making a lot of money. So the conventional loan has its purpose, but there's ways to get around that. And working with RussCorp and all of us, we can help guide you through all that type of thing. Private money. God, we love private money.
Private money is our favorite money.
Absolutely. Private money is exactly what it sounds like. These are individuals. We get them through people that have IRAs. We get them through different types of resources that friends, family, anything we can do to kind of help us with a non-mortgage conventional loan. Reason why? Why do we do private money, Rick? What's the advantage of it?
Well, there's multiple advantages. Number one, it's not our money.
OPM, guys.
Not coming out of my pocket, not coming out of your pocket, right?
Right.
Secondly, I can typically get a better interest rate than I can with other non-conventional types of mortgages or lending. I can get a better rate. I can work on the terms because it's just another person like you and I. And we're going to communicate and we're going to determine what best suits that deal and what best suits each individual, he and I or she and I. That way we can come to an agreement on what kind of terms that we want to do on this deal. We can do a short-term loan. We can do a mid-term loan. We can do a long-term loan.
That's right.
So it's really up in the air. It's all dependent upon the negotiation of the deal.
Absolutely, and we're finding there's a lot of private money out there. There's a lot of individuals that didn't do well in the stock market, and they'd much rather go into real estate because what are they in there? 4 months, 6 months. Some of them maybe go longer. We've got people who go in there for years and work with you. Back to that, very few qualifications are needed. It's based mainly on the property.
I am seeing some individuals do want to have a certain credit rating now, but that's far and few. But well, I don't know. For us, I guess it's far and few between because we've had relationships.
Relationships are a big part of it.
That is the biggest thing about a private lender, guys. It is a relationship you build with the individual. Okay? This is really super important for you to understand. Real estate investing is a relationship business in all facets. Not only the person you're buying from The real estate from, you have to have a relationship with, but the person you're getting the money from, you have to have a relationship with.
Where do you find these people though, Rick?
Look, I'm gonna. If you're out on the street right now, guys, you're looking around, you're listening to this in your car, you're sitting around in your office. Look to your right and left. Those are your people you borrow money from.
I guarantee you.
You will never know who has money unless you ask. If you don't tell people what you're doing and what your aspirations are and what you're trying to do in the business, then you're doing yourself a disservice. Prime example is my next door neighbor found out what we were doing and wanted to lend with us. He had money that's sitting there he didn't know what to do with, wasn't making him any money, found out what we were doing and asked how he could get involved. Never would have thought to doing it, but I sat and talked to him and told him what I was doing in life.
Yeah, it's amazing because if you tell people what you're a real estate investor and what you do is I buy houses, I hold them, I collect income, I get equity. Everybody wants to be in real estate. For some reason, very few people are shy from it, but a lot of them don't have the education or the time to be active, and they would much rather invest with you and let you do all the work and get a good return.
And they like to see the crummy house and then come back, 2 months later, a month later, 3 months later, however long, and see a beautiful house. It just floats their boat.
It's real good. This is a basic little scenario. It's a little more expensive, as we said, than conventional lending, but it's just a little comparison. If you had a $200,000 house that's beautiful when after repair value, in other words, when it's beautiful on the market, they're going to loan typically about 70%. Which means you get $140,000 if you bought the house right, and that's all another course we teach you in how to buy a house, how to know to get the right prices. Their interest rates are going to be anywhere. Hey, if they don't know any better, you can get it in at 5-6, but 7 to 12% is the average. If you went to somebody's experience, the 7, 8, 9, 10 is relationship money. That's where you can use these after you've done a couple of deals. They'll work with you for a long time. Points, 1 to 2 points to start off with. Hey, where do we get points now? Sometimes none or all in the rear.
Hey guys, it's again all about the relationship.
Yeah.
Now he has length of loan, 4 to 6 months. That's typical for a rehab.
Correct.
Okay, but I want you to understand there is longer term money out there. There's 20 and 30-year money out there.
That's right.
If you want to do a buy and hold, you can do it through private money.
That's excellent. Closing costs with private people are normally very inexpensive. It's documents, your closing that you do at the title, things of that nature. It's not real expensive. They don't charge a lot on their end because they're getting points and interest. They know where their money's coming from. Hard money. Everybody say, what is hard money? Well, hard money is similar to private loans, but these are institutions. These are companies that borrow from the private lenders and the investors. And they, for an extra fee and an extra amount of money, they're structured to give you loans so you can rehab your house, fix it up. They even have programs where after you fix up, they'll get you into a conventional loan. It's a one-stop shop for a lot of people. We've used them before. A lot of people like them. But for a new beginner, it's not a bad way to go to get started because they really look out for you. They're not going to loan money unless the deal's good.
But do I have to have a lot of credit to be able to borrow?
Well, you don't really. They say they don't do credit. It's not real important because it's an asset-based loan. Asset-based loan just means the property is what they're looking for. As long as they're in a position of that 70% or less or 75, they feel comfortable if they can feel the deal works.
You know what
You have to have a little bit of credit if you want better rates. Though.
I was going to say, you know what I am seeing? ILS, which is one of our lenders, and Jet Lending, which is another one of our favorite people that we work with, do tell us that if you have good credit, there's a probability and a possibility you'll get better rates.
You get a better deal.
Okay. But do I have to have it? Absolutely not. The deal is what they're looking at. If the deal works and you can work with the deal and the money that they offer you, then you can buy the deal. It's pretty much that simple. Now, what are they going to do? Are they going to look at that deal?
Absolutely.
Oh yeah, they're going to look at that deal and make sure it makes sense for you, make sure it makes sense for them. The cool part about that is they can keep you out of trouble, guys.
Absolutely.
They can keep you out of a deal that's a bad deal.
And that's good for your protection, especially if you're just starting out. If you don't have mentors like our company and other investor groups, you need somebody to help you out to make sure you're making the right investment. Nothing worse than bad decision because you did not seek any help.
Yeah, look, guys, a no deal is better than a bad deal.
That's right. Pros and cons are very similar. Very flexible loan structure.
Asset based primarily.
Right.
The hard money lenders, they've been in this business. A lot of them are still investors, and they understand this real estate investing business. Again, they're not going to let you get into a bad deal. The cool part about it is even the bad stuff isn't so bad.
That's right.
Yeah, look, you're going to pay a higher interest rate, but quite frankly, it's a riskier loan. A riskier loan requires a higher interest rate. Most of the time, they're shorter terms. 3, 6 months, 12 months.
Now they got 12 months. Some of them are even coming out with hard money up to 5 years or longer now.
20 years, yeah.
20 years is a new program. So guys, don't shy away from hard money lenders because they're trying to be very flexible during this time. And don't be scared of the interest rate, guys. Let me tell you, 11, 12, 13, 14% seems real high. But if you're carrying a note just for 4, 5, 6 months, figure it into your costs, figure it into your cost of doing business. You're still going to find out you can get in and out fast without a lot of hassle and get the job done before. Don't pass the deal up because you can't find money. There is money out there.
Yeah, and look, if you don't know where to go, give us a call. We'll get you set up and talking to one of our hard money lenders.
There are a lot of them in town. There's some that are very highly recommended, and we'd be glad to recommend them. Just an example, just like we did with the private money, the same thing, a $200,000 house, if they loan 140, your interest rate's going to be between 20 and 16. It depends on who you're talking to. Interest rates,
unless you have credit.
Unless you have some credit.
We saw plenty of single digit.
It's getting better and better, guys.
Interest rates with hard money.
Points, 2 to 4 points. Lengths alone, the average 4 to 6 months for rehab, but like we just said, they're coming out with a lot longer programs.
Can go to 12 months.
Closing costs, there's a lot of fees, but they have to cover their expenses because it is a business. It's not an individual coming out of his retirement income. When you need more funding, what are your options? We've already talked about the type of lending you've got, and we've talked about buying a house and getting 70%, getting some money to buy it. But like we said before,
sometimes that 70% doesn't really work.
Doesn't cover you guys. You may get in there. You may not have reserves. You may not have the money that you need to carry the cost to the whole process. And if you don't have that bank account up and you don't have a lot of extra money, you've got to find money.
I mean, there's ways I can do that?
Yes, absolutely there is. Strategic funding. This is probably the most important funding any real estate investor can look at. Even if you don't need it today, you need to have it in place. But people go, what do you mean strategic funding? Real simple. It's funding you can use, funding for anything. Funding with other funding, without other funding, no collateral. They don't attach to your property. Flexible repayments. And they're available as loans and lines of credit. We've all heard about lines of credit. Very important part of your business. Lines of credit, you don't pay until you use them. If it's credit card based and things of that nature, you don't use it till you can use it, but you can get a lot of money. You can get up to $300,000 to a company if you've got good credit and you've been and got a good credit history, because they're looking at your credit history. That's all they're looking at.
Strategic funding has what? Personal lines of credit, business loans,
term loans, revolving lines of credit. They've got personal and business credit cards. A lot of different vehicles for you to be able to have extra money. Most of our members and people we know that get anywhere from 30,000 to 80 or 90,000 when they start.
So when I use this and I'm using it for a house, they don't collateralize it. They don't put a lien on the house.
There's no lien on the house. In fact,
They care about the LTV, the loan to value.
do not care about that. They do not care
About the after repaired value.
Not at all. It's your.
Is it secured by the property?
Absolutely not. It's secured by your personal pay history and your credit.
What happens if I need it for something else?
Well, they don't encourage it, but you can use it for anything you want to. Just to remember.
How quick is it? How quick can I get it?
If you got it all set up, and it takes about 30 days to get all your lines of credit set up.
In 30 days, can I start using the money?
As soon as you get it, absolutely.
So, easy to get, easy to maintain. How do they find out about it, Steve?
Well, they need to get if you find it interesting to do that, you need to call us at our office, 281-890-1004, or go to our website.
info@hbcrea.com.
And we'd love to let you get some information on it, talk to you a little more about it, and get you hooked up with one of the biggest ones in the country. I think you'll find it very worthwhile, even if you need it just to run your business. Doesn't have to be real estate. You may need money for your other businesses. Very lucrative, very solid. Definitely get a line of credit.
If you didn't get your money out of the PPP plan, this is a way to get your money.
Yeah, I know a lot of people didn't get their money, or if they got something, it wasn't what they wanted.
Hey, look, this slide, I really appreciate this slide a lot. Friends and family plan. What are you talking about, man? Friends and family. When you need money, you don't have any friends.
Well, it's funny you say that, Rick. I started this business, and I'm working 2 or 3 years in the business, and I ran across a deal. I needed something like in 2 days, 3 days. I had to have close a deal. It was a.
Can I tell this story?
Yeah, go ahead and tell the story, Rick, because it affected you big time.
So I'm thinking about retiring. My brother calls me out of the blue and says, "Hey, Rick, I need $14,000. I said, "What the hell you need 14 grand from me for? You got enough money." He says, "Well, look, man, I'm pretty tapped right now on cash. I need $14,000. I said, "What are you going to use it for?" He says, "I'm going to buy a house." Now, I'm not in this business yet. I am still thinking retail. So he says, "I'm going to buy a house for $14,000. And I'm thinking, what in the heck kind of house is he going to buy for $14,000?
I can see your mind thinking what kind of house it was.
Like, oh my God, what the heck's he
How
buying?
far is it leaning over?
so he said, "No, really." He says, "I got a deal on a house. I need to close it in like 3 days." I said, "Man," I said, "Dude, I just put all my money into it. I had literally the day before put all my available expendable cash into a CD and had just gotten it. Had got a great deal, good rate. Thought, man, this is going to be a great, year. I'm going to have a lot of money coming back from this stuff." And then he asked me for the money. So I said, "Look, here's the deal. I just put it all into a CD." So I thought the most egregious, horrible terms I could come up with. I charged him double-digit interest. I charged him to break my CD, what the bank was going to cost to pull my CD out. I charged him points. I did everything. I mean, it was the worst deal you could possibly fathom for him. Except he didn't tell me one thing. He still laughs. He had already sold the house. He was just needing to close it because it was a FHA?
That was actually, it was HUD home.
It was a HUD home.
Through a bank.
Mm-hmm. So he had to pay cash for it to get it out real quick so that he could make sure that his other person could buy the house.
Which was a 2-day turnaround.
So I'm thinking, here, I'm going to have 6 months worth of interest. I'm getting these points. He paid me back in 4 days.
Right.
He did pay for my CD to get broke.
I did pay for that, and you made a little interest on it.
Yeah, what? $12?
Well, yeah, short term. But what are friends for? You'd be real surprised at friends and families how they can work.
But the reality is, it gave me some insights as to how I understood this business. I realized now that there was money to be made. So family can be an opportunity for you.
Especially when you've been in the business a little while. They'll see that you're successful. They kind of all get curious. You probably already showed them a couple of your houses by now. And they say, well, golly, are you making any money? You can say, oh, absolutely. And you'll be surprised that we've got cousins and everybody come up and say, hey, I've got an extra $20,000, $30,000. Can you help me out? I'd like to invest.
Friends are the same way. I will tell you, though, the thing I found out with friends is it's really sometimes better if they become a partner in the deal. I think it's better for them initially to see what the process is and see that you understand what's going on. After that, they might just loan you money because they don't want to deal with it.
It's a good source of money, and it's not something that usually a new investor wants to start off doing because they're scared to borrow money from family and friends. I understand that. Yeah.
Hey, but a good deal's a good deal.
That's right. But you'll be real surprised how that works. Another way to get a little extra money is what we call a second lender. Sometimes you're running short on the deal, and a second lender is just somebody else that comes in and loans you the extra money you need to complete the deal and process.
So I've gone to a conventional banker, I've gone to a hard lender or a private lender, and I've borrowed as much money as they'll lend me, and I still need another $10,000-$15,000. Is this where I use this?
This second lender can come in, and if the lender or the first lender position or allows you to put a second lien on it, the second position, these are the guys that can help you out.
So is this common?
Very common today, because if they don't want a second lien position, you have to do like a private note, but you can still collateralize that.
Guys, look, we do this all the time. In fact, I have a small IRA at a self-directed IRA. That's what I use it for.
Yeah. It's for $20,000 somebody needs.
It's for second lien positions. I'll typically partner with other people and get them their money. It's a really small IRA, but it was one I used most of the money out of that IRA fund, and I have just a little bit sitting in there, so I didn't know what to really do with it. So I just started lending it out with friends of mine that also have IRAs that wanted to pool the money together so that they all could make those IRAs grow.
And you'll be real surprised. A lot of people invest through IRAs. It's real common in today's world. So you need to find out how to do it. Again, working with us, that's something you'll learn how to do.
Hey, look, guys, if you don't have a self-directed IRA or you don't know about them, you need to get with our friends at Quest and learn about self-directed IRAs.
They have classes online almost all during the week. Learn about it. Learn how it can make you some money, and it's a safe place to invest from. Another place to get it. This is a little more unusual. Everybody heard of the word HELOC, but a lot of people don't know what it is, Rick. HELOC is your home mortgage. This is where you take your homestead, and let's say, example, you have a house that's worth today $500,000, and it's paid down to $250,000. You can borrow money against that house, and for whatever you want. It's a personal loan. It's collateralized by the house. You can take it down and you can pull all the equity out. They'll let you do up to about 75% of the value of the house. So if I need an extra $200,000, I can pull it out of my homestead.
So, okay, I got you. So that makes sense. So a lot of people may know this as a cash out refi.
Cash out refi, but it's similar to it. But a HELOC is a special loan.
Oh, I get it. Yeah.
It's similar to a cash out refi, but hey, it's usually set up for in and out real fast. You may borrow the money, go do your deal, then put it back in and pay it back. They're like a 10-year loan.
Kind of like a line of credit.
Almost like a line of credit.
Okay, cool.
It's kind of due. The hesitation some people have is the spouse. As my wife told me a long time ago, and said, Stephen, I love you. You can do this business as long as you want. Make all the money you want, lose all the money you want, but you lose the house. Your suitcase is on the front step. I said, never will I do that. Yeah, you get a few things. Main thing, it's a cheap option. You can borrow it real fast and get it in and out real fast. Takes about 30 days at the max to get your money set up.
And here's the bad part. Look, you borrow the money, you spend it. You need to pay it back. It basically makes your home loan higher.
Oh, absolutely.
Okay, so if you had $250,000 to pay off, and you got a $500,000 loan,
You got two.
you had $250,000 you paid out, and you spent that $250,000, and you didn't get it back to pay off that HELOC portion. You got to pay them both back.
That's right. Hey, maybe you make so much money it doesn't matter.
True.
Retirement accounts. This is the 401ks. There are people I assume still have some 401ks out there.
Yeah, there's a lot of money in 401ks.
There's a lot of money. I'm being a little ridiculous, but you can borrow against them.
Some of them, yeah, not all of them.
Not all of them. So check with your provider and see if it's something you can borrow. There are always some penalties. If there are some taxes on it, but it's a quick way to pull out $30,000, $40,000, $50,000 when you need it.
And actually, a lot of 401s do allow for home purchase.
Correct.
For the down payment portion, and it is penalty free. You can take it out. The feds have a nifty little way of doing that where you don't have to pay the fines and the penalties.
Well, and they say that you look on here, you see there are some disadvantages. It's not tax free. You are pulling out some of your.
That's not always true, though.
Oh, they're changing that. Yeah, they did change that recently.
That's not always true.
You're right.
It can be tax free and penalty free, provided it's for your residents, and I think it's a first time homeowner.
Could be.
I'm sorry, I don't know enough about that to tell you 100%. I will look, but I know you can borrow on your 401.
But two of the things is when you pull the money out, it's less money that's working in the market for you.
True.
The biggest thing is if you lose your job, and this happens, especially these days, you have to start repaying it within 60 days. So you're taking it out. If you don't pay it, it gets real ugly with fines and penalties, I hear. So be aware of the pros and cons. It's real important. What else have we got? Hey, life insurance. Remember whole life? Our dad put two of us through college in whole life. He had $100,000 policies, paid them up all his life, and when it came college time, he grabbed the money out of there, borrowed it, 4% interest. I remember he complained. That was high back then. 4% interest. But hey, he put my daughter through college and medical school or grad school. Put me into college. It was just another way to get money. You can do the same thing if you need money for your projects and your houses. It's your money.
I even understand there are some types of term life insurance that you can do the same thing against.
So check and see what you got available. Here's the biggest thing, and we do this a lot. Bring in a partner to do a deal with you, because you get to a point where you're doing a couple deals down the line, and everybody runs out of money. At least everybody I know.
Equity partner can be really, we can kind of term it as another type of a private lender, if you want to look at it that way. An equity partner is actually somebody that has the capital. Maybe you have the deal, and you have some money to put in the deal, but you don't have enough. You bring in somebody that wants to join in and do it for some type of arrangement. Either, a private lender is just going to lend you the money, and he's going to want interest and a payment. Whereas an equity partner really doesn't get that part of it. He's going to put money into it, but he's going to do it on a percentage of the profit.
Correct.
So it makes a lot more sense for them to put in money and do it as cheaply as possible, because that inevitably gets them more profit on the deal.
Well, definitely. And they're going to be mostly passive. Very few partners, unless they're experienced investors like us, are active in the deal. You're going to bring the contractors. You're going to do the deals. You're going to do the rehab. You're going to get it ready. Even on long-term buy and holds, you can have a lot of people partner up. In fact, we're even working with people now, putting groups together to do buy and hold for long-term. Good way to do it. Leverage is great. But anyway, equity partners are very good. We believe in it very much in our business. Let Houston Buyers Club help you. That's the main thing we do. Rick, we got some programs for this too.
Hey, look, this is our moment of glorious self-edification. Look, guys,
I like that word.
edification. You like that? So, we have a couple of programs that we're working with. This is our current program that we have. It's our blue chip investor level. Basically, what it is we're going to work with you hand in hand. You can read what it says there. You get a lot of benefits in this program. Weekly videos, live training, coaching, calls. We talk to you at least once a week. We go in a group call once a week. When we have projects in the area, we initiate field trips where you can physically go and see properties that are being rehabbed, properties that are being bought, properties that are being sold. You'll even be, Steve talked about it earlier, real early on, about education, how important it is. We do have education availabilities and opportunities available for you. We give I think one of the really important things, you join us, we give you a special class on property evaluations and what we call the principles of pre-qualification. In other words, how do I pre-qual a house to see if it's going to be a deal? And what do I need to do when I go in to make sure it is a deal? You get to go through a boot camp. It's a real estate boot camp. We don't do them live anymore because we do them all over, with people all over the state. We do them as a video class. We're considering now we're thinking about doing a Facebook version, which I think will be really interesting.
Oh, that'd be very good. Yeah.
So, excuse me, not Facebook version. A Zoom version. What was I thinking?
Well, Facebook Zoom.
A Zoom version so that we can all have interaction instead of it being a static video. In addition to that, let's see here. Go to the next slide. In addition, we'll do a 30-minute one-on-one call to help you with planning your portfolio. Look, we really, really, really are invested in long-term investments. That's the buy and hold properties. We believe in being landlords. We think it's really important. One of the advantages that you have, you can use our realtors here in-house. If you're in Texas, we're only licensed in Texas.
Correct.
But if you want to, you can use. You don't have to, but you can use our realtors. We'll help you find properties.
Our attorneys.
Help you post properties. Help you get them sold, get them listed, get them rented, whatever you need to do. We'll help you set up your real estate team. We'll help you get your management service in place. And if you're a blue chip elite investor, that means you have to be a member of our group. We will give you access to video training platforms on a special site dedicated only to you. So you will have access to every class and every piece of educational information that we have available.
And we've been doing classes and education for the last 5 or 6 years. We've been mentoring. We've been working in one-on-ones. This is a more of a group effort because I think people are very internet savvy today. And like our younger edition of our group, Chris, says, hey, I'd rather listen to it on my cell phone while I'm driving than sit down in a class and be bored and fall asleep. So there's a lot of ways to learn. This is the way to learn the business, and you stay in the program for a while. You will definitely keep up with the education and help you more successful, and we're always there to help. Everybody say, hey, is it free?
Oh, no.
Absolutely not.
I love you guys, but I don't love you that much. However, it's normally $600 a month. What we're doing right now is, because everybody's having a little difficulty with the COVID period, we've decided to bring it down to $300 a month, 50% off our normal pricing. And if you do it on a yearly basis, it's normally $6,000 a year. We're also bringing that down to $3,000 a month.
That's 2 months free, Rick.
Actually, yeah, it was. So, look, guys, we're here for you. If you want to talk to us about it, all you have to do is give us a call. Here's contact information. You can email us at info@hbcrea.com. You can call us at our office at 281-890-1004. You can call myself on my personal cell, 713-515-0308. Call my brother Stephen, 281-414-0449. Or my son Chris, if you have any questions, at 713-416-1767. Again, this is Rick Russell and
Stephen Russell.
Hey, we appreciate you listening to us today, taking a look at this video. If you have any questions, please don't hesitate to call. Asking questions is free.
And just be aware that what we taught today on the financial due diligence is a very important part of your real estate investing. Just like anything else, learn and educate yourself. Don't do things that you can least mitigate some of the mistakes that we've been made in this environment. Help yourself out, work with groups like us, and let's all be successful in the future.
So this is Rick Russell, Steve Russell, and Chris Russell wishing you great real estate investings. And until we talk again, see ya.
Oh, just one quick. Friday, 2:00. Special deal every Friday. Talk to the investors. Pay attention to our area.
See us on Facebook, 2 o'clock Friday afternoon.